a lot to parse here, guys. I'm not sure the market reaction that we saw to that PPI report this morning was good or bad, but they seem to be taking it in stride. The S&P unchanged on the day, though we're seeing modest gains elsewhere in the Dow, the Russell, and Dow Transport.
Yeah, but it's not like it's been a straight line all day, right? Like we're bouncing around in a big way. There are some outperformance. KB Home kicking the whole home builder group to the upside. You got 18 numbers in the S&P 500 home building index, and it's up about 3.3%, Tim. So there's some outperformance today.
There is, but if you look at the index level, it's really hard to see what direction things were moving today. Yes, we finished in the green, but the index searching for direction much of the day, moving between gains and losses, more than half a dozen times today, Vonnie?
Not just that, Tim, but have you noticed the Russell 2000 was up 1.1%. It was the only equity index that was actually higher all day long. It didn't dip into negative territory at all. And it's the second up day for both the Dow and the Russell 2000. I don't really know what conclusion to draw from that. I just think it's really fascinating.
Yeah, I mean, that is what's leading the charge. It is a lot of sort of the utility companies, materials that we were talking a little bit earlier about, railroads and airlines having a phenomenal day. We should point out volume is actually lower here. When you take all of the tapes, the ABC tapes here, right now heading into the close, we're down about 18% from yesterday. Though we'll see if that changes as some of those final trades come in here in the last few seconds. We do get the closing bells here in New York, the clapping and cheering. And, well, I guess you got a little bit to cheer about, at least if you're paying attention to the Dow. The Dow Jones Industrial Average is going to close out the day higher by more than 200 points, or roughly 0.5%, 42,515 and change. The S&P up about 6 points on the day, a gain on a percentage basis of about 0.1%. The NASDAQ in the red, down about 0.2%. The NASDAQ 100 down 0.1%. But as Vonnie was just talking about, there's the Russell 2000, a gain of 24 points, or more than 1%. S&P mid-caps up 1.1%, and Dow Transports, Carol, up 1.3.
Yeah, it makes you wonder, is it finally the moment for small caps? We'll have to wait and see. Having said that, I'm going to go back to the big caps. Look at the S&P 500, Vonnie, and you've got most names in the index actually higher today, 382 to the upside, 118 to the downside.
Yeah, if you look into it and look and see what's going on under the hood, we have many sectors, maybe 8 of the 12 sectors in the green, Carol, particularly utilities and financials, but obviously utilities had sold off big time, so that might be to be anticipated. Financials, we're about to head into earnings season, so we'll see if that can continue. And then, areas like healthcare and communication services were lower.
All right, let's get to some of the individual outperformers today. Constellation Energy, once again on that list, up about 3.5% at the close today. It was a top gainer in both the S&P 500 and the NASDAQ 100. It's just off of announcing its deal to buy Calpine, which sent the stock, up about 25% on Friday. Today, both UBS and Jefferies raising their price targets on Constellation to $329 a share and $274 a share, respectively. Jefferies has a hold rating, calls the Calpine acquisition deal positive and value accretive. UBS, by the way, has a buy rating. The stock closing at $288, just under actually $289 a share. I mentioned how the home builders, really some outperformance in the group overall, and that's because of KB Home. That stock at its highs up almost 14% in today's session, finishing the day up 4.8%. KB Home reported earnings and revenue and also deliveries for the fourth quarter that all topped average analyst estimates. The stock up the most, I should check, in intraday. It was about 2 years, but we really saw some major outperformance. The highest since about December, but up the most intraday in more than 2 years. One more for you, Whirlpool, also some outperformance, up 4.4%. The company rising to its highest since about October of 2023. Goldman Sachs analyst out maintaining a buy rating, but raising the price target from $125 to $138. Stock closing at just about $126 a share, Tim.
Okay, you got the gainers. I got the decliners. I do want to start with shares of Meta Platforms, falling today by 2.3%. The company cutting roughly 5% of its staff through performance-based termination. The company does plan to hire new people to fill those roles this year. That's according to an internal memo sent to all employees. Eli Lilly shares, the biggest drop since March of 2021, the biggest drag on the S&P 500 today. Did you see this?
I am so fascinated by the story. Did you see the reason why?
Yeah, the weight loss drugs, the GLP-1s that we've been talking about for years at this point. They couldn't make enough of them. Well, now they have too much of them. Shares down 6.6%. We're talking about Zepbound and Mounjaro, obesity and diabetes drugs, respectively. Demand skyrocketed over the past 2 years as Americans sought them for weight loss. Companies invested more than $20 billion to boost supply, now facing the problem of having more drug than it thought it needed. And I know you guys were talking about this a little earlier. I looked up and saw you were talking Signet Jewelers.
Yeah.
Worst day going back to March of 2020, down 22%. This after
So I take it you
disappointing.
didn't buy your significant other any jewelry this holiday season?
No, in fact, what they're trying to do is have more jewelry that will appeal to people who are shopping for themselves.
Oh.
Engagements are down as well. That's a huge issue.
Okay.
Lab-grown diamonds.
Uh-oh.
They didn't have enough supply of those. Those are less expensive, obviously. And then gold jewelry as well. They didn't have enough supply of that. That's what people wanted. They didn't necessarily have the right product mix.
Yeah.
So sort of a perfect storm brewing.
Can I just say, I don't envy like retail CEOs.
No.
I mean, I just feel like trends
tough.
shift so fast, and I don't know how these people actually do it every day. I mean, I know they have a whole team who was supposed to sort of figure it out, but I don't envy them at all. I just want to point out too, just on the stock front too, guys. I mean, I was just taking a look here. The outperformance that we saw from small caps relative to large caps. One of the biggest gaps that we've seen now going back to November, at least if you measure it up against big tech and the Mag 7 and things like that, just pointing that out. You see yields on your screen there. You did actually see a drop in yields on the short end of the yield curve, but that was primarily just for the 2 and the 5-year yield, and that was only by about 1 basis point. So your 10-year yield pretty much went nowhere. At one point, it was above 4.8, but it's going to settle today pretty much unchanged. And you did see a slight bump in the 20 and your 30-year yield on the day.
All right, we're waiting for a lot to come at us, right? We've got another inflation print this week. We've got big bank earnings, a lot going on. And yet, what really caught our attention is we're starting to get some early indication on the congestion pricing in New York City and whether or not maybe it's actually having an impact on the traffic in and around New York City streets. Well, we found traffic actually dropping by about 7.5% during the first week of congestion pricing, Romaine.
Yeah, we're just going to get to some earnings real quick here, Carol. This is on Applied Digital. Crossing the wire right now. The adjusted loss per share coming in at 6 cents a share. And believe it or not, that's better than expected. The street was actually looking for a loss of 13 cents a share. So a little bit of an improvement there in the company's financials. Revenue pretty much in line with estimates, 63.9 million. Just want to make sure I get that right. Street looking for 63.4, shares up 7% in the after hours.
Yeah, we should point out, too, they were up about 10% in today's session, right? They actually signed up a deal. Macquarie, right, will invest up to $5 billion in their data centers being built by Applied Digital. So that gave it a big boost kind of ahead of the earnings.
And why would you bet against data centers at this point, right?
Well, because maybe we need the energy to like.
Hey, that's why the energy.
It's a little
That's why the
problem,
energy
maybe?
companies
All right,
are
party
still gainers
pooper.
every day. For
I'm
you,
a little
Carol.
concerned about the climate. Have you, I'm just saying.
Okay, good segue for us to talk more about congestion pricing, I guess.
Well,
I think
can I tell you about this? I kind
Please.
of forgot this existed, and then I was like looking at my Easy Pass thing or whatever. So, like, you get charged $9 for coming into Midtown, basically the central business district.
Yeah.
Then if you leave, you do get charged again, I think, or something.
No,
like
no,
that.
it's just
Or
one
just
charge for the
once
day.
in.
Yeah.
But anyway, I mean that's pretty hefty. I know they give a discount for like taxis and Ubers, right?
Yeah, they do. The whole motivation here, though, is to reduce congestion in the central business district, of which our office is in, but then use that money to then support the public transit options here from the MTA. So the idea is that the subways get better, the trains get better, the buses get
subways,
better.
Really? Okay.
The environment, less pollution.
I rode the subway today. But
Well,
How was
apparently
it?
they're going
not
to be
better.
Well, they're putting police officers on the subway now overnight, every night. So that has potentially something to do with this idea that people have to use the subway a little bit more often with this congestion pricing, because it's pretty onerous. Peak times start at 5 a.m. and they go to 9 p.m. on a weekday.
To 9 p.m.? Mm-hmm. All right. What are we chatting next, guys?
CFA rates.
That's right.
Romaine, you should be keeping track
I
of this
know.
because I know that you are the king of the CFA here at Bloomberg.
Yeah.
CFA rates.
I'm just a prince. Don't overstate it.
They did stay elevated, the pass rate, but still nothing like you would imagine, falling to 43%, above the historic average. But that's a lot of people that are failing the CFA every time. Now, first-time takers did particularly well.
Yeah.
They had a pass rate of 49%.
Yeah, these are the level 1 takers. So these are the of the 3 levels out there. This is the first one, technically the easiest one. But I mean, this is a notoriously difficult exam. I did power my way through it, though not to brag. But it is difficult, and the pass rates. I should point out the pass rates when I took it were even worse. So they've actually improved. believe
So
it or
you're
not.
better. That's what you're telling us, right?
Well, it was harder when I took it.
How many times did you have to take it?
Oh, no.
Did I
Yeah,
say
I did
that?
not pass. Well, I passed level 1 on the first try. Level 2 took some time,
I bet
but I
you
got
did
there.
well.
And then
I bet
level
you
3.
did.
That's a journalist right there,
Yeah,
Carol.
so. Doesn't matter how you get there, Carol, as long as you get there.
You're still passed, right? You still passed.
I got my certificate, and it's on the wall, and it's glorious.
It's very
I put
cool.
it in the living room.
All right, well, congratulations. All right, guys, that's
I had to take down my grandmother's picture and put it right there.
What?
She didn't have
I'm
a CFA, you see.
joking.
If she had had one, you would have left it up.
joking.
That's harsh. All right, that's
Yeah.
a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Folks, we will see you again. Same time, same place tomorrow.